A bank app can show two balance numbers at the same moment, and both can be accurate within their own definitions. The current balance may describe transactions already posted to the account, while the available balance may also reflect temporary restrictions from pending items that have not finished settling. Imagine Noura opening a fictional account screen after checking into a hotel, where the screen shows a current balance of AED 1,200, an available balance of AED 850, and a pending hotel card authorization of AED 350 that is not yet labeled as a final posted charge. The first arithmetic picture is deliberately simple. Subtract the AED 350 pending hold from the AED 1,200 current balance, and the result is AED 850 available, so the difference between the two displayed balances is fully explained by one visible temporary item rather than by an unexplained loss. A card authorization is a status step rather than the end of every transaction story, because the merchant first checks and reserves an amount, the account records a pending hold, and a later event can post a final charge or release some or all of the temporary restriction. In this classroom example, the current balance remains AED 1,200 while the hotel authorization is pending because no final hotel charge is posted to the ledger yet, even though the separate available balance has already moved down to AED 850 to reflect the AED 350 temporary hold. The available balance therefore answers a narrower timing question in the illustration. After accounting for the pending AED 350 restriction shown by the app, how much of the displayed account amount remains available under that app's current transaction state, assuming no other pending items or account rules are present? Suppose the same fictional screen is compared with an AED 900 purchase amount. AED 900 is AED 50 greater than the displayed AED 850 available balance, even though it is AED 300 less than the AED 1,200 current balance, which shows why reading only one label can hide the timing difference. That comparison does not predict what a real bank or merchant will do, because account rules, linked facilities, offline transactions, currencies, holds, and processing timing can vary, but it does show which four fields make the classroom picture readable: current, available, pending items, and release or expiry information. The transaction path matters because authorized does not mean fully settled, pending does not mean permanently deducted, and a later state can post or release the hold, so the two balance numbers should be read as a snapshot of processing stages rather than as two competing claims about one finished ledger. Now continue Noura's fictional story with a final hotel charge of AED 320. The original AED 350 hold no longer needs to remain in full, so AED 320 posts as the settled charge and the unused AED 30 portion of the temporary restriction releases back into the available amount. With no other transactions in this closed example, the final reconciliation is AED 1,200 minus the posted AED 320 hotel charge, which equals AED 880, and once the temporary hold has cleared, both current and available balances can display AED 880 because the pending difference no longer separates them. The ending AED 880 is not created by adding AED 30 to the old current balance. It comes from replacing the temporary AED 350 restriction with the actual AED 320 posted charge, leaving the ledger AED 320 below the starting AED 1,200 and the usable amount aligned with that settled total. This is why the original AED 350 hold should not automatically be described as the final hotel cost. The visual settlement splits the temporary amount into AED 320 that posts and AED 30 that releases, preserving every dirham in the reconciliation without counting the hold and the posted charge as two separate purchases. During the pending stage, uncertainty is limited but real. The screen can identify the authorized amount and its pending status, while the later path remains labeled post or release, so the honest interpretation avoids claiming a final merchant charge before the account actually displays one is settled. The subtraction AED 1,200 minus AED 350 equals AED 850 explains the temporary available figure, while the later subtraction AED 1,200 minus AED 320 equals AED 880 explains the settled figure, and keeping those two moments separate prevents the pending hold from being mixed into the final ledger arithmetic. A compact reading checklist is therefore descriptive rather than prescriptive. Identify the current balance label, identify the available balance label, inspect the visible pending items, and read any hold release, expiry, or settlement information supplied by the account interface before interpreting why the numbers differ. Real institutions can use different wording and timing, so this fictional hotel example does not promise that every hold behaves identically. Its purpose is to make one transaction lifecycle visible, with AED 350 pending first, AED 320 posting later, AED 30 releasing, and the ending balances reconciling at AED 880. The plain takeaway is that current balance, available balance, and pending transactions describe related but different stages of account activity, and reading their labels together can explain a temporary gap without inventing missing money. This lesson is educational only, not financial advice, and contains no personalized banking recommendation.